We are now live, the June 19th, 2015 Small Business Accounting Advisors. Hello, everyone.
Hola.
Hello. We have Meredith Wood with us today, Fundera. She's going to give us an overview and talk to us about being partners.
Awesome. Thanks so much for having me, Gina. I'm getting a little bit of an echo. Oh, it's off. I lied. It's perfect now. I am going to talk a little bit today about what Fundera does, and more importantly, how we're working with accounting advisors to help their clients find financing. So let's start with the easy part, which is, what does Fundera do? So in this, oh Lord, sorry, she was freaking out. There we go. So in this day and age, if you wanted to go get a business loan, you probably would start with the bank, because back in the day, if you needed a loan, you went to the bank. But unfortunately, right now, about 82% of small business loan applications are getting denied by the banks. That's leaving about 14 million small businesses without the funding that they need to grow. And this is based on statistics on how many people are actually applying for funding, or need funding but aren't even applying for it because they don't think they stand a chance. So there's obviously a huge opportunity there. There's a lot of small business owners that aren't getting their needs met. So there's this world of non-bank lending that has popped up to fill that void, and you might know of it as online lending or alternative lending. And this industry has a lot of pros about it. It's faster time to funding, there's shorter applications, which small business owners love to hear that. There's finally options for those that have bad credit. There's also a lot of cons. One is that it's higher cost. The alternative loan is always going to cost more money than a bank loan, and that's something your clients need to keep in mind. And in some cases, they can be astronomically higher. And also that it can be very difficult to know where to go. You know that there's this industry out there of these online lenders, but where do you start? Who has the best customer service? Who has the lowest rates? And that is where Fundera comes in. We are a marketplace for business loans. So the way it works, you come to Fundera's site as a borrower, you fill out one application, and you're able to apply to dozens of lenders with that singular application. Think about it like the common application that students use for colleges. And so one, it's minimal work. You're able to easily apply to multiple lenders, so that when you receive, you're able to receive multiple offers and then compare them and ensure that you are really finding the lowest cost one for your business. Throughout the whole process, you work only with Fundera. You're not interacting with the lenders, so you don't have to worry about getting phone calls from 25 lenders wanting to talk to you and sell their product. Instead, you work with us, and we're unbiased as we work with you and talk about, what is the best possible solution for your business? What is this documentation that we're asking for? Why do we need it? When you get offers, make sure that everything is converted to APR so you can really compare it on an apples-to-apples basis, and help you identify like the hidden fees that you may not be aware of, so you know when you walk away that you really got the best loan for your business. It's a free service for business owners. We actually make our money on the back end from the lenders. We make a set fee, about 1 to 3% of any successfully funded loan. It's equivalent to 1 to 3% of the loan amount, and it's not something that's baked into the cost of the loan, which is what you might see with a more traditional broker. So it really is of no cost to the borrower. And the other thing is that we're a mission-oriented business, so we will be as likely to tell you not to take a loan as we will tell you to take one, because there's just some times that offers don't make sense. They could bankrupt a company. Perhaps you have a better offer from a friend or a family. We really help you kind of see the whole scope of things there. So that is what, in a nutshell, what Fundera does. Gina, is there anything you'd like me to expound on? Questions there? Hop into the product, or?
I think it's an awesome offer that you're giving everyone, because traditionally there just hasn't been anybody that did that. There's been like Lending Tree, and if you get that, you get your email blows up, your telephone blows up, and even months later you're still getting calls. The other thing that I really like is the fact that you hold their hands. You hold the client's hands, basically, and walk them through the whole process, helping to explain things that they may not understand.
I have a question.
Yeah.
Is the benefit for the bank the fact that they could probably reduce staff so they don't need people out cold calling or, going out to businesses where you're driving business to them, as opposed to them having to hire staff to go out and look for business? Is that a benefit? Is that one of the benefits or one of the reasons they pay you?
Correct. So for our lenders, the benefit is they see it as an acquisition channel. So when you think about all their marketing costs that goes in for them acquiring a customer, it's really expensive. So we are probably one of their most cost-effective acquisition channels. But then you nailed it on the head and you paired it into, in a lot of ways, we're also a workforce for them. We have contacts at these lenders we are working with. And the interesting thing about our marketplace is that there's different products that some require more documentation, some require less, and I can get into that a little bit later. So depending on the lender, maybe they're more involved with us, not the borrower, with us, on documentation needed for the specific borrower, but it also does outsource some of their work. They come in having a better understanding of, is this even a right fit for them? I think it helps qualify leads, because we have some lenders that do daily remittance, and there's just some business models that they just don't make sense if you're doing daily remittance. Like maybe you get paid 2 or 3 times a year and it's large sums. You wouldn't want to get into a daily remittance loan. And so I think that for our lenders, it also helps send them higher quality leads, because we've looked at the situation from an objective point of view and saying, okay, understanding their credit score, their revenues, their business structure, what's going to be the best possible loan for them. And so they walk in, both the lenders get high quality leads, and then the borrower obviously approaches the best appropriate lenders for them.
Well, one thing that struck me is that, like, I am in a small chamber, I'm going to drop out, but anyway, there's like about 4 or 5 different banks chasing, potential leads, and I got to believe that that's expensive for the bank in terms of paying for their employees' membership in the chamber, and having the employee be there and lose their time, chasing dubious leads and that kind of stuff.
Absolutely. Yeah, I mean, that's what's great about online in and of itself. It really streamlines the acquisition process for all types of lenders. So yeah, that was a great question. Other questions?
Let me check our question and answer. I did turn that on for our Hangout. No audience questions at the moment. So I understand Fundera now is offering a partnering program for advisors?
Correct. So something that we noticed early on in the company was that the people that came through that were higher quality, they had their stuff together, probably doesn't shock you to hear that their accountant was involved in one way, shape, or form. And when I say accountant, I'm using that broadly. Maybe it's CPA, maybe it's their bookkeeper. And we were noticing that advisors, in that sense, were playing a heavy role in the financing process. And then if their client would get funded, the advisor would come to us and say, I'm so thankful that I have a solution to recommend to my clients. So that's why we decided to build the Fundera Advisor Program, which enables accounting professionals to easily work with their clients on finding financing. So the way that the program works is we've kind of enabled you to work with your clients in one of 2 ways. One is on simply a referral basis. Your client comes to you and they tell you, look, I think I need some financing. Maybe you guys have a couple discussions. They have a goal they want to achieve. They want to expand to a new location. You send them your referral link, and then the client goes through the normal process. But then a nice thing about them using your referral link is that at any point in time, if they need your help, if they need you to upload a document or something like that, you can actually access their application from your portal. And then the second part of that is that we do have a referral fee associated with the program. If you would like to receive a fee for working with Fundera, if one of your clients successfully funds, you get a referral fee equivalent to about 1% of the loan amount. So if your client applies for a $100,000 loan, they successfully fund, that's $1,000 for you in terms of revenue. If you choose to forego the fee, you don't want to receive a fee, we can actually then pass it on to your clients if you'd like that. So they can use that towards their loan payments. So there's kind of that to say thank you in one way, shape, or form. And then the second way that we work with advisors is much more hands-on, and this is where you're actually applying for your clients. And within your portal, you can create an application for any client. You complete all the information that you can, and you would be surprised, you know most of this information. It's all of their financial information. You can upload documents, and then when you've completed everything that you can invite your client to the application to complete the rest. No matter what, the client will have to come in at least at the very end of the application to authorize a credit, do credit authorization, because we can't have people just sending off clients and getting their credits pulled. But that does come very late in the application, after you've kind of seen where they've matched and got an idea of what their chances are. So just keep that in mind too. So the idea is that I think that there's a very big industry trend right now about accounting professionals stepping away from just crunching numbers and moving into this more advisory capacity, and not just being about reactive, like not just seeing in your client's books that they have an apparent cash crunch, because really more often than not we find people are coming to us for good reasons. It's because they're growing their business. They want to increase their marketing spend, they want a new location, they have so much demand for their inventory, they need money so they can meet it. And so it's not just being about reactive, but by actually adding this as a service to your practice, you're saying to your clients, when the time comes, you now know you can come to me. Because maybe they're searching online right now and you have no idea. But instead, when they go through you, it's a much safer process for them, because they have you looking out for them, really help identifying, is this the best solution for their business, what is the best possible option, and due to Fundera's sort of objective overview of the industry, you're able to have that sort of same objective overview for your client. That being said, and something that Gina and I talked about prior to us going live, was that idea of whether or not your client should even go online for a loan. And I think the thing that you have to make sure they understand is that if they're able to get a bank loan or a bank line of credit, it's always going to be the cheapest form of capital, and they should absolutely take it if they qualify it for it. So that being said, that's a tough question. How do they even know they're bankable? If they're sitting 715 above in a credit score, maybe even close to 800, they've got high six-figure revenue, especially if they're sitting in the $1 million revenue range, and they have no red flags. So I'm talking, yes, they're profitable, they haven't had a recent bankruptcy, they haven't had a foreclosure, they don't have any liens on their business, then you should probably tell them to at least try the bank. Other than that, it's going to be a little bit rough. You would be surprised the people that are getting their lines pulled from the bank, that are you would think would be bankable, and they go to the bank and for whatever reason they're denied. And I think that it has less to do about the borrower now, more about the banks and changes that have happened there. There's increased regulation post-recession risk. Small businesses are inherently riskier than larger businesses. And secondarily, it's not really profitable for these big banks to underwrite small loans. Most small businesses are only looking for, I mean, our average loan size is $45,000, if that gives you some insight into the loan size they're looking for. That being said, we have done very large loans. We've also done loans for like $1,700. So there's a wide range, but for these banks, if it costs them just as much to underwrite these $1 million loans as it does a $10,000 loan, it doesn't make sense for them to do these smaller loans. It's not profitable. And so that's why you might have a customer that you send to a bank and you think they're going to be just fine, and they come back and say they were denied. But luckily there are options for them. The only time you would have a customer that is bankable that you might want to have them consider going online is if they need cash fast. And that might be that they've got a once-in-a-lifetime opportunity, an order from Whole Foods they really want to be able to fulfill, because it would mean a great relationship going forward. And then that would be the only reason you might suggest they try. You can find single-digit interest rate loans online that will be fulfilled much faster. So bank loans can take months before you ever see anything in your account. The applications are tremendously long, where the online loans are much faster. And I will say this, that on our platform, we do have SBA loans. So we have a way for you to apply for an SBA loan online, which is huge to a lot of people. And that in itself, it operates very much like a bank loan. But because of the online application, you are, we've had, I think, people get an SBA loan in a week because they were very diligent about their documents. That's the other part of it. It's going to take as long, often it depends on you and how long it takes your application to get together. But I think there's tremendous opportunity. I don't think anyone would disagree when I say that this is possibly one of the most challenging parts of running a business, is having enough capital to meet your needs and to meet your goals. It's a very, it's an industry that isn't very transparent in a lot of ways, and we're trying to change that, and I think that bringing advisors into that helps so much. And yeah, I think that sums up the advisor program as best as possible, but I'd love to talk through questions there.
I have a comment. It seems to me you could look at it the other way around, in the sense that if you were to be listed as an advisor for Fundera, that you could market, say, zero or QBO services or tax, services, so they would get their books in better shape for being bankable.
You are, yes, you just hit it on the head again. So part of what we see is we see a whole different tiers of borrowers. So we see people that are all the way to bankable that just needed faster money. We see people that are in the SBA loan category, and it's only a couple of years before they're bankable. And it kind of goes down. And these people that are getting into these shorter term loan products that have lower credit scores are really building their businesses and building their financial portfolio. A lot of them, their books are a mess. They are. Some people, we ask them for a balance sheet, and then we have to send them a balance sheet template. They don't even know where to start with P&Ls and balance sheets and things like that. And so it's already happening with our advisor network, in that when we have closing calls with customers and we're talking about different ways that we want to keep working with them, one of them is asking them, are you happy with your current accountant or bookkeeper? And if not, would you be interested in talking to one of the Fundera advisors? And so we send our clients to our advisors already. There's a lot of synergy there, because it's so great for our clients too, and it's nice to have a trusted network for us to be able to send to them. And honestly, it looks great for us to be able to say to our client, oh yeah, of course we have somebody in Nashville we can refer you to. Some of them still want the local thing. Some are more comfortable with just remote, but there are still some that are like, no, I want to be able to at least meet them in person. So you're right. There is also that benefit of, and we have a lot of ideas how we want to sort of scale that, and that it'll be exciting to see how it ends up being implemented, where in turn, by being a Fundera advisor, we're actually driving business back to you too, because we have a ton of people that need it.
Nice, nice. Do have a couple questions. Dwayne had a question. What is the criteria for people that are eligible to apply? Christina has a question. They're both kind of vetting the client questions. Hers is, if the credit rating is not great, less than 690, and a company revenue producing but cash poor, would they qualify for fast cash, or would they qualify for just working capital? Or if they are a small company that may need money maybe once or twice a year to maintain client services and growing their business?
So I do want to I might answer these separately. So do you guys actually mind if I share my screen really quick?
Go right ahead. Screen share. And I will
make sure I have
our audience to see if we have any questions there.
Okay. Can you see this page right here?
Yes.
Okay, so I just wanted to show you, I'm going to answer these questions specifically, but I wanted to show you guys, this is the first page of our loan application. And you see we ask questions like, what's your desired loan amount? What are you using the funds for? When did you start your business? Credit score, revenue, bank balance, where it's based. All of these are qualifying questions. Granted, this is self-reported information. We will have to verify this down the road. But at any time your client is curious about their chances of qualifying, I would fill this out for them or invite them to fill just out this page, which, if it's okay with you guys, I'll actually fill one out right now because I want to show you the next page. And I just want to give you an idea of what you can learn without, like, their credit score will not be pulled at this point. I'm going to make myself a really good borrower so you can see lots of matches. But say yes. So and another thing, just to give you guys a kind of a visual of our lender network, for those of you that will be at Scaling New Heights, 4 of our lenders will actually be at Scaling New Heights, 2 of which I'm pretty sure you probably know well if you've been in the QuickBooks space, which are Bluevine and Fundbox. So that just gives you an idea, like, of working with Fundera. You're able to apply to, so now I see I have 15 matches based on the data I gave them. But so you are able to apply to not only multiple lenders, but a diversity of lenders. So Bluevine and Fundbox are focused on using your invoices for financing. Their models are actually very different. But then we also have the SBAA on there. We have the medium-term lenders that'll be at Scaling New Heights, for example, Funding Circle, Lending Club. So your clients are able to sort of see, of all those lenders, where do they qualify and which are offering them the lowest deal. So Meredith, test. Now everybody has my cell phone number in case you want it. So once they complete this page, or you complete this page, you jump in right here, and we are able to kind of tell you whether or not you have a chance of receiving an offer. And based on this, granted I put in very good information, I see that there are 5 different product types that I qualify with: medium-term loan, short-term loan, SBA loan, line of credit, and invoice financing. I can select that I'd like to potentially apply to all of these, and I can see which lenders I'm applying to, and if I can say, oh, I don't want to apply to on deck, you can unselect that person. Gives you an idea of how many questions you'll have to answer in order to complete the application, and how many documents you'll need to upload. More details on these products. But the reason I wanted to show you guys this page is because if ever you find yourself trying to benchmark a customer, see if it's worth referring them, there's really no harm in filling out that first page and seeing, do they match with any options. Their credit is not pooled, and they don't necessarily have to proceed forward. At this time, if they do match, we'll probably reach out to them and see if they have any questions. So that would be the only downside, is that they would receive a call from us. But the thing is that if you use your advisor link, if they use that, or if you create the application for them, we will call you. We won't call the client. We will not interface with the client until we have permission from you to do so. So if you sorry, go ahead.
I have a question. So you could basically create scenarios depending on the type of what you think the credit score might be. So my question is, could you export each of those scenarios to like an Excel workbook and have different tabs, or can you export the screen to Excel?
So you can't export this screen to Excel, but something I think what you're kind of thinking about is what I'm hoping to develop, which is to give you all benchmarking for product type. So say, like, basically minimums. So like the minimum credit score, the minimum annual revenue, What would the profitability need to be if there's profitability? Those little things, so that you can look at your customer's profile and then look at those benchmarks and have an idea. I mean, is that kind of what you were hoping to?
For example, if your credit score is, say, a 700, then you've got access to these different products. If your credit score is like a 685, then you've got access to just hold one variable. You know, just have everything constant except one variable would change. Like,
I like that. Yeah, we'll make that available to you. That's one of our goals, and we're actually building out an interactive tool that we're calling, it's like a business monitoring, and you would be able to hook up your QuickBooks or your Xero account to it, and it benchmarks based on your data. So maybe you qualified for some loan options, but you didn't really like them, they were higher cost. So you connect your QuickBooks and we'll monitor your revenue. We'll have credit monitoring, like soft pull that doesn't affect your credit score. We'll monitor your credit score. So not only will we be able to alert you when a new loan option becomes available, like when you move up that next tier, but we also, the way it'll look is it'll tell you what you need to do to get to that next point. So if you want an SBA loan and you're only qualifying for short-term loans right now, the business, what are we calling it? Let's call it business analytics tool, business monitoring, will tell you what you need to do to get to that point. So that's also like, it's a little bit fancier than Excel, but I do think for our advisors, we're wanting to prepare that sort of information so you feel like you can tell clients that.
So that would be, I'm sorry, for the advisors, the second type of advisors, partner advisors you talked about, not just the referral, but the ones that are actually doing the loans?
Both.
Both.
Basically provides benchmarking. That'll be part of like our in your toolkit and advisor portal that we're building out. We're actually, so if you were to go and sign up at the end of this hangout, which I hope you do, it's just fundera.com/advisors. It's free to sign up. It's easy to sign up. We're actually we're redesigning and relaunching the portal next week as well in alignment with Scaling New Heights. So there'll be some more features. And we've only scraped the surface there. So one of those things would be giving you a benchmarking tool no matter which type of advisor you're choosing to be. Because we want that to be fluid, because there may be some clients that want to do it themselves that you refer, and there may be some clients that want you to do it. So you might actually jump in between. But we want you to feel confident enough to give your clients some idea of what their chances are.
I was just thinking you could turn that into a consulting opportunity, like if you need to get to this level, here's what you need to do in terms of maybe set up a budget or cutting back on this expense or what have you in order to make your numbers work.
That's really cool. Yeah. And then my hope would be, because the business monitoring tool would be free, is that you could really hook all your clients up on it. And they just kind of have that insight when they want it. And you have that insight too. Because if you know they're interested in like an SBA loan or something like that. But to specifically answer questions, so Dwayne, so the criteria is pretty fluid because we have loan products for people whose portfolio is a little bit rough, and we have loan products for people who are basically bankable. So the minimums I give people, so we do have startup loans, so you can have zero revenue, but the startup loans require higher credit scores. I'm talking you probably want to have 660 or above. So that's kind of its own subset of a category. And then after that, I would say our minimums are about 500 for the credit score. Revenue, let's say 100,000. And you don't have to be profitable for some of our lenders. If you have things like bankruptcies, there are some lenders that will still look at you. You probably just want to be a year out from that. And the other thing that's going to be really important for them is the cash in the business. And so every lender is going to ask to see your bank statements. So if you have a lot of NSFs or something like on your business bank account, that's going to be an issue. It's not necessarily going to be preventative. That's the thing that's tough, is I always get nervous giving like black and white limitations because there's always cases that are extraordinary where something else comes into play, or maybe they have a very terrible credit score but they have killer revenue. So that's the other thing, is you also have to think about it, how each thing sort of plays into the other. But I will say the two most important factors are the credit score and are the revenue. And so when I think so Christina talked about credit rating is not great, less than 690. So we have options there. We actually have really good options there. My question is, how far below 690 are we talking? Because that changes things. But I say as long as it's really above 600, they're going to be in a better spot. But, you know, they're probably, like I said, we do have things in the 500 range, but it kind of depends on what everything else looks like. They've got good revenue, so that's good. Cash poor, I would need to know more about that situation by cash poor. Maybe they're not very profitable, which like I said, that's okay. We have lenders that will look at companies that aren't quite profitable yet. Or if they're a small company that may need money once or twice a year. So we see that happen a lot. Actually, more often than not, do we have people that come and take out a loan through one of our lenders, and then 6 months down the road, they're getting a second loan. And often, there's two situations where that happens. One is that they didn't qualify for the full amount the first time out the gate, but the lender said something like, you know, after a certain amount of time, we're willing to revisit this, and they proved themselves to be a strong borrower for about 6 months, and so then they're granted the other half that they wanted. And the others are that their business is just continuing to boom, and so they come back through, and instead of going just straight to their lender, everyone always comes back through Fundera because they still want to compare their options. They want to know, maybe I worked with this lender this time, but you know, maybe there's a cheaper option out there. So we actually have a lot of people that then graduate. They start out in one loan product because it helps them build their business, their revenue, prove their credit. Then they're almost graduated into a lower cost product after that.
Great. Does anybody else have any other questions?
Yeah, is there an affiliate link? I mean, like one that we could put on once we become an affiliate, that we could put on our website that will direct traffic to Fundera, you know, with our link?
Absolutely. So, like I said, when you sign up for the advisor portal, there's those two different ways that you can either create applications or you can share a referral link. So your referral link is just like an affiliate link. So anytime, anywhere you use that on your website, even in your marketing, because it's not a crazy referral link. It's just Fundera.com, pretty much / your business name.
Okay.
So you can even put it on marketing material if you want, and it'll bring them back to Fundera, but we'll always know that they're your client. And
so what is the advisor's responsibility for just using that link and putting it on their website? What's required of the advisor at that level?
So in terms of just putting the link on their website, nothing. Like as long as you're sending the traffic, if you want that referral fee, you'll get it. We just ask that you know, if you choose to use Fundera branding, that you would run that by us to make sure it's in brand. Like we would prefer to send you a logo versus you pull one off the site. But we actually are okay if you want to white label it a little bit. We have some people that are trying to sell it more like a service they're offering than just recommending Fundera specifically, which I'm fine with that. I actually think there's a lot of power in that because your clients trust your brand and they don't even know who we are. So I'm totally fine with that. With the partner portal, you'll have access to some marketing materials, PDFs you can share with clients, and you see we kind of have different options. One is like you're just going to refer them to Fundera. The other is you're going to work with them but tell them about Fundera. The one is if you want to white label it. We have some email templates. So we have lots of language that if you would like to copy and paste and use that language, we're fine with. And our hope is to build you out like a whole marketing suite that you can use with logos, templates, website templates, that sort of thing. So it makes it very easy to implement the program, but also implement it how you want to implement it.
Great. So let's talk about the partner portals that you had mentioned. You had mentioned that a couple times.
Mm-hmm.
Is that on your website for us as advisors to go to?
Correct.
Or is that specific to each advisor?
So it is specific to each advisor. You are all looking at close to the same thing. It's just that your client's information will populate your portal. So once you sign up at fundera.com/advisors or fundera.com/advisor, whichever one's easier to remember, they both work, and you sign up now as an advisor, you enter in the information. When you're doing that, you're creating a login. And you can log into your portal anytime on Fundera's site, whether you're on the home page or you go again to fundera.com/advisors. You log into your advisor portal, and it is your portal. It's unique information. And especially the one that you guys are going to be looking at next week has some really cool information in it. So it'll let you track any client you've ever referred, whether you worked with them or they just used your link, where they are in the process, and if they were funded. Did you get your check? You'll be able to see month-by-month comparison of, last month you referred 5 customers and you made this much in referral fee. And you'll still get reporting of what's going on with your clients in the new portal, and so that information is unique to you. But then you all will have access to the same content. We've lined up our content. We've written some columns specifically for accounting professionals that talk about implementing this in your business and how to work with your clients on things like building their credit and that sort of thing. And you'll have the marketing materials in there. And I think the other thing is, like, we're very, very tech-oriented company. We can move very fast on things. So when you guys have suggestions, like, oh, this would make my life so much easier, like, let me know, because I think we're very good about taking feedback and implementing it. I mean, that's where this second version is coming from. And so I just want you guys to know that that's what I'm here for, is to make this easy for you and make it be what you want it to be. Because what we're trying to do is make it easy for you to help your clients with this problem. If there's a way we can make that happen better, let me know.
And I'm sure you'll post the link to the affiliate program.
Yvette, I do have that. I have that listed. If you go on the left-hand side,
okay,
go to the showcases, the yellow tags,
yeah,
and you scroll down, that link is there.
And Meredith, once we become an affiliate, how do we get access to a logo, a Fundera logo?
So right after you sign up, I will be emailing you. Maybe it'll be right when you. Sometimes I've been known to call people as soon as they sign up, but I can't always do that. So you'll get an email from me sometime in the next 24 hours, and just let me know you'd like a logo for your site, and I'll send it to you by email.
And are there any requirements to becoming an affiliate?
So the only thing is that we treat accounting professionals a little bit different than because we have a lot of like loan brokers come through our site and want to be affiliates, and that's just a very different relationship. And so to be an advisor, you have to go through a vetting process, which basically identifies that you're running a practice where you're doing bookkeeping, accounting, taxes for small businesses, or even perhaps you're maybe more technology focused, maybe more QuickBooks implementation, but that still qualifies. But for me, at this point, I've been pretty much I self-verify everybody that I know is an accountant or not, and so there is a qualification to be an advisor, and that is you have to run a business that is helping small businesses with some sort of accounting need. But you in our new portal, it'll notify you of that. But in this portal, basically, if you sign up, you have access to it, and then basically you don't get turned off. You're good to go. But like for somebody like you, I would know. Most anybody that signs up as an accountant, I can tell it in 5 seconds. It's very easy to Google somebody's name and figure out what they do. I can also find out in 5 seconds when somebody's a broker. And then we basically turn off their advisor portal, send them an email, and let them know that they have to work as a pure affiliate for us.
I have a question. On the portal, what is the security level? I think the clients might be a little concerned if they've got documents that have their social number or credit scores up in the cloud somewhere. They want to have some comfort.
They should be concerned about that. That's a good thing. But we have bank level security. It's the only way we could do business. Since we do see so much sensitive information, our technology stack is phenomenal. It's gone through, we're verified by possibly every single organization out there in terms of security. So when we launched, that was one of our top priorities was to have that bank level security.
Well, for example, their credit score, we wouldn't necessarily have access to their credit report, I would presume, but how would it get into the portal?
So the credit report is something that's pulled by the lenders. So we're not pulling their credit. So that comes at the very end once they've submitted the application to the lenders. So the credit report is never actually uploaded to the portal because it's something the lenders are looking at themselves.
Okay, so the portal would be, for example, if you want to do QuickBooks or Xero financial statements and upload PDFs to the portal, that kind of stuff, or
Correct.
maybe like an application you'd fill out and upload that to the portal, or?
Yeah, nobody really has a written application in our lenders. So the things that your clients would be uploading or you would be uploading are like their P&Ls, their balance sheets, their tax returns. Tax returns are rather popular. That's what most lenders verify income and revenue through. And then the SBA loan can sometimes, like, there is like one lender that will require a debt schedule if you do have current debt. There are some lenders, the SBA can get a little bit, is more document heavy, so maybe they'll need something from your landlord. There's all sorts of documents that they could ask for, but that's what we're here for, is to make that process very easy of identifying what that is.
So either the client or myself could upload, say, a tax return, because normally what I do is I use portals, and I'll put their tax return out in their portal, because if a bank wants to get a copy of their tax return, I don't want to have to intervene, so to speak, and you know, the IRS has certain restrictions, or you have to sign these confidential, you know, agreements, you know, as to third-party access, and so to me it'd be easier to have the clients upload the tax returns to the portal rather than me doing, you know, but I have to get some sort of written permission from them to upload it.
Well, you either or can. So that's the nice thing about when you have given them your referral link and now you can access their application at any time from your portal. Is the nice thing is you can pop in and upload something if they need it, or they can pop in and upload something if you've been working on it the whole time. You know, and we're here to help clarify. I think that's the nice thing, is that I really think our technology is awesome. It's what allows us to do what we do, but our customer success team is killer. Like, these are all ex-bankers who have such an understanding of the industry. They're so helpful. This sounds like a strange thing to say, but they're very kind, which I feel like you need to be, because these are people that sometimes are in situations where they're frantic, or they've been denied and they've been put down, and it's just nice to talk to someone who gets them and understands and is there to kind of make the process be as pleasant as possible. And so that's, again, our customer success team is there because our customer success team will work with the accountant and the client, and they kind of talk, they all make a game plan together. Okay, this is what you're going to do, and this is what you're going to do, and also, they have a really good way of keeping it flowing seamlessly, and for those that like to work both when the client and accountant work together on an application.
Okay, on the portal, I would presume, I mean, like I have CPA Site Solutions for my portal, and I can set up individual folders for each client, and they only have access to their folder, so I'm assuming it's going to be like that. Is that correct?
Correct. So the way it would work, it's not quite folders. So when you log into your portal, and let's say you have 3 different clients you've started applications for, you can at any time log into, let's say I'm one of them, and Gina's one of them, and Bob's one of them. You log into my application, and you all of a sudden are taken to wherever I'm at on the application. And maybe I'm on the document page, and you can see, okay, Meredith still needs to have her P&Ls for the past 2 years uploaded, so I'm going to upload those. And then you log out, you stop impersonating me. Think about it, impersonation. So you stop impersonating me, and you go back to your portal, and then you click into Gina. But when Gina logs in, she's just logging into her account or her application. That's all she sees. She gets the total normal borrower experience.
So the client's not going to see the other clients up there?
No, they won't even know. Like, they're going to see everything just as if they had gone through Fundera.com and started an application.
Okay.
So that was a great question.
Dwayne, did we answer your question? There was a question about the link on the website. Is there specific language? Yes, we answered his question. Great.
Cool.
Thank you.
So I just signed up on the link
Mm-hmm.
for the affiliate or the advisor. And I guess I signed up and it took me into a site and I guess I'm set up. Is that how it works?
Well, I didn't get. Oh, there you are. I see you.
Yeah, and I got to put in my profile, and that's pretty nice. That's quick.
I see you.
And so
I wouldn't
Yvette,
know you, but
you must be the quickest ever response that Meredith has given.
Probably, yeah, because I know I want to do it right away because I have a couple clients.
You
I think.
say same day, Meredith, and sometimes right away. How you like this?
I like it. Great way to end a Friday.
Well, I've got one client that's trying to get a line of credit through a bank, and I haven't heard back if he's been successful. So if he's not, then this could be an option for him.
Absolutely. And if ever you want to just talk, like you've got a client and you're not sure if they're a fit, give me a call because we can kind of talk about whether or not it would make sense to even maybe just have them start the application. Or maybe if I'm like, oh no, stick with the bank. Let's let that flesh out and see what happens. Because I'm happy to sort of be that overview voice to give you some perspective over whether or not to proceed. So I'm curious to ask you guys a question. So like Yvette, you said you have a couple clients. Now, are you thinking that you would like to work with them where you just refer them, or do you think you're more excited about actually walking through the application and doing it for them or with them?
Well, what I want to do, see first if they qualify. I mean, I have two clients that I know I'm pretty sure they'll qualify. And then I want to present them this opportunity because one of my clients has expressed to me that he wants to open another location and will probably need a loan. So
what does he do?
they're into restaurant, kind of entertainment for, I don't want to get into too much detail, but around that line. And he's done very well. As a matter of fact, me and the accountant have been thinking that he should make it into a franchise.
Oh, wow.
Done very well. So, and they're looking for a location around my area to open it because the one that they have is probably about an hour and a half away from here. So, I was thinking, talking to him about it because he did mention it to me the last time I was on the phone with him. Mm-hmm. And so I want to present that opportunity to him and kind of run the numbers through Fundera.
Yeah.
And, take it from there. So I guess to answer your question, for right now, yeah, I think I'd like to kind of work as an advisory with this, like give that an option to my clients. I think it helps me and my business as well. It's just another service I can offer them and more under my belt, and it's a great opportunity because it's like you're really helping them. Mm-hmm. This is just a wonderful tool to have for small businesses because, a lot of times it is very difficult for small businesses to get a loan, especially when they're just kind of starting out, although this particular client has been in business for at least 10 years with that location that he has.
Wow, yeah. We do a lot of restaurants. It's our second most popular industry. It's actually why we were founded, was by an inspiration by a restaurant. So we like that industry a lot in terms of they make good borrowers.
Yeah, so I don't know, but I think this is great because I just think what it'll do also that another thing, we're supposed to be like their advisors, and this is just another thing we can help them with as an advisor.
Awesome. That's great to hear.
Dwayne does have a question, but I want to come back to that, Dwayne. I want to ask you, Meredith, what is the advisor's responsibility if they are preparing the applications for the client? The second, not just the referral, but the actual advisor. And do you have a name to name both of these?
So I have yet to name them because I do feel that I think it's going to be fluid. I think people are going to do both. I don't think people are going to stick to one. I've already seen that be the case thus far. I find that a lot of people are doing a piggyback where they start it and their client finishes it. Kind of what I feel like Yvette's going to do, where she wants to get to the match page, see what the options are, and then her client comes in, and maybe she'll come in and do the documentation. So how I've been describing it is hands-on and hands-off. Hands-off is simply sending the link. Hands-on is being involved in the application. But if you guys come up with better names, I'm happy to potentially just...
I like the hands because you're holding the hands of the client. And
there we go.
Yeah. So, yeah, I like the hands.
We could do both, right? I mean, we don't have to be just like, you know, I could do both, right? Because I do want to have the link because I'm getting in the process of redoing my website.
Mm-hmm.
That's one I would like to have a Fundera link, and on my page is one of the, you know, recommendations and resources and learn more about Fundera kind of thing for anyone that goes on my site.
Yeah. Let me know if any of the tools we've provided in the portal aren't sufficient for that. Let me know. Copy is one of my things that I do, so even if you want to help, I can help you write up something if you're not satisfied with what we have.
That's great. And so you'll let me know about the logo, though, right?
Correct.
Okay.
I'm gonna go ahead and, since we're talking, like normally I would email you, but since we're already talking, I'm sending a note to myself to send you logo. But Gina, to get to your question, if you are actively uploading their documents, technically, you know, you have to think about the fact that there's a lot of self-reported information in the application, and the document's job is to verify it. So I think that in terms, but it's not like the process of like CPA audited financials. That's not what's happening here. So really your responsibility obviously is to provide us with true and honest information, because if you know it's not, the lenders are going to recognize that with the verification of the financials. And so in terms of responsibility of working with Fundera, if you're going to be in control of the process, it is most helpful if you are responsive to our team. If they call you, if they send you emails, because chances are the reason they're doing that is because they want to clarify something, such as, you know, oh, we need you to add this one document to the application, and here's why. Or we got this document from you, but we need the prior years as well. That sort of information. You know, that's what our team is here for, to work. Because if you're going to take that hands-on process, you want to be the person in charge. Then just remember, like, that we will be contacting you and not the client. How I've seen it work the most doing the hands-on approach is that the accountant is doing a lot of the work in terms of uploading what they can, and then when they want to have a phone call with us, like talking about this, maybe the client has received some offers and they want to talk through it, then we do a conference call, which the client's on the phone, the accountant's on the phone, and we're on the phone, and we say, listen, you know, here's this product, here's what we actually are calculating it as, APR. And did you notice that this one had a closing cost on it? When you consider that, there's the issue of that's actually more expensive. Or this one has daily remittance and this one has monthly remittance, which is better for your business model. So that's been really successful for us as far as being involved in that conversation. But our goal is that within the right training materials and with enough exposure to working with us, that you guys will be able to confidently be able to consult your clients on those things.
I have a question. Is there going to be a certification program?
There is. We're actually writing that right now. So I think it's people are doing certification programs, but they're very tech focused. Where we're not. You don't have to learn how to use Fundera. It's very simple. But you do need to learn the things about like qualifying customers. What are the different products and how does that matter and who's a right fit for which, and the documentation, like what does it mean to need this and this and this, and what different loan products are going to need what documents. So kind of preparing you, the certification program's goal will be to give you the confidence to know this industry, know how to speak about it, know how to consult your clients, and hopefully provide you with like the tools we talked about, Dennis, like the benchmarking Excel sheet and things like that.
So you're basically a loan consultant.
Exactly. I like that. We say that on our homepage. The copy's tested really well. But It's tough because we have that human side, but we also have the technology side, so really trying to kind of show both those parts of ourselves. But yeah, and Dwayne, your question about the S corp. So if in any, whether the S corp, no matter what their business structure is, if there's multiple owners, there is a chance the lenders will need to see the credit score for both the owners. It depends on the percent of ownership. So it's kind of on a case-by-case basis, and every lender also has different benchmarks for what that looks like. But I will say that if a business has more than one owner, that they just need to make, and I know S Corp is a little bit different in that, but people need to be prepared that there's a chance, and it's not always a bad thing. There have been times that, you know, there's a husband and wife venture, but in reality, you know, the wife does something else full-time. But she's got a really great credit score, and she's the reason they get a good loan offer. So it's often a good thing that they want to see both the owners' credit scores. But I would prepare your clients that have multiple owners that there is a chance that they'll need to see both, or 3 or 4.
Absolutely. So we are just about at the end of our time. Boy, it went fast today. Does anybody else have any questions? Any questions? Sunny, you've been quiet today. Anything you would like to ask?
Yes, I am.
I have a question. Meredith, I have a client that has, I think they have 8 partners. And so would they have, all 8 partners have to get their credit score or fill out an application for each partner? How does that work?
Do they each have equal ownership?
No.
Is there like one partner that has like 50%, and then is that okay? So in that circumstance, probably not. Okay. But I would actually need to check in on that, because we had something somewhat similar to that, but I don't want to tell you one thing and it's actually the other.
Okay.
So I'm going to ask on that. My thought would be just the majority owner. But when I send you the logo, I'll send you the answer, just the verified answer to make sure I'm right there.
Thanks.
I learn something new every day, because I get questions and I'm like, I've never thought about that before. That's what our sales team is great. So I also head up the content here at Fundera, and they come to me all the time with, Meredith, we have to write an article on, you know, what if you're buying a house at the same time you need a business loan, what do you do? Like, I would have never thought that was a scenario, but it is a scenario that comes up a lot.
Do you get scenarios like when someone's just starting a business and they need funding, you know?
Yeah, that's a popular one, because people never know what's best. Do you give up equity? Do you take on early debt? And you know, my recommendation is, if you have a strong credit score, so 640 or over, that you take out debt financing. I think debt financing is better than equity financing, because I personally wouldn't want to give up a part of my company. I think crowdfunding is very difficult. It's very time intensive, and it only works for certain types of businesses, potentially those that can do like a product pre-sale. And then friends and family is a very scary territory to go down, because I think it can hurt a lot of relationships. All of a sudden, the family member will be like, I actually need you to pay me back sooner. I just think that it's much easier to enter into an official contract with a lending organization that does this professionally. But again, really, there's only options if you've got a 640 or above credit score.
I have a question. Are there any loan covenants on some of these loans, like current ratio or debt to equity, or, you know, that they're going to be monitoring?
So, see, that's again on a lender by lender basis. You know, one thing that I think that if I was working as an accounting professional and advising my clients on this, I'd always calculate what the debt service coverage ratio would be. You know, so for those that don't know what that is, that basically is like in terms of free cash. Let's say at the end of every month, these lenders are going to want your loan, your free cash to be at least multiple times a certain amount of the debt. They usually want it to be 1.5, you know, because that means you have 1.5 times cash to cover that debt. If you're sitting at a 1-to-1 ratio, that literally means like $1 less and you're going bankrupt. And so they wanted a 1.5. Banks are going to be in the 2.25 range and up. Our lenders, some will look like a little bit lower than that because, like I said, you don't necessarily have to be profitable. But I think that when you're helping your clients figure out, and we do this with people too, when we're figuring out should you take on this loan, I would calculate that ratio for them because it's going to be not only what lenders are looking at, but more importantly, how close are you cutting it right now? Granted, a lot of times people take out loans, like I said, to fulfill an order, and all of a sudden they have a huge cash influx in their business. But these lenders, for the most part, aren't going to necessarily be monitoring that.
So the huge cash influx, you want to pay off your loan early. Penalty for that?
Depends on the lender and the loan. So I love that question, and these are questions you have to make sure your clients are asking. We will help them understand that too, because like a lot of people are like looking at an SBA loan and they're thinking, oh gosh, I don't want 10 years to pay this off, and we have to remind them there's not a prepayment penalty, so technically you could pay it off early. It's still the lowest cost loan, or you don't pay it off early.
I used to work for Washington Mutual before they crashed and burned and almost took down the banking system. But how about balloon payments? Do some of these loans have balloon payments?
So I actually don't know if any of our loans do. I'm just trying to think.
I'm going to ask is the terms on most of these loans. It varies, right?
Yes. So that's, again, going back to like not only do we have a diversity of lender, we have a diversity of product. And
right.
So when I say that, it usually comes down to the term and payment structure. So we have, we've got the SBA loans, traditional 10 years terms, monthly payments. We've got medium-term loans, which are 2 to 5 years. So there's this traditional type loan just with shorter terms. Then we have like a short-term loan, which is 3 to 18 months in length with daily remittance. And we have some that have weekly remittance. And then we've got like the invoice financing products, which are a little bit different because maybe there's one that operates almost like a short-term loan. You have to pay back the amount in 12 weeks. The invoice just acts almost as the collateral. And then there's others where you literally pay when your customer pays. So it's a very different structure. And I actually think that's great because there are times where it just makes more sense for someone to do one of those shorter term loans, for example.
How about negative AM loans?
I don't know what that is.
Negative
AM loan is a killer. Basically, your interest is your payment is less than the interest, and so the difference gets added back to the loan balance. So at the end of the day, you have a larger loan than you took out to begin with.
I don't know if we have any of those in our product. I've never heard of anything like it. I do know we have our lender is doing a newer type. One of our lenders is premiering a kind of newer type of loan that's going to be like a merchant cash advance, but with ACH, in the sense that they're doing daily remittance out of your account, but instead of set payments, they're doing a percentage. So they're doing like 5%, 8%, whatever it is, and there's no prepayment on that. So I don't think we've done that where we've introduced that loan yet. I actually just learned about it yesterday. I was speaking on this panel at the Manhattan Chamber, and the lender said that they were premiering this new loan. I was like, well, that's interesting. I'm curious to see what that'll look like financially, because MCAs are crazy with the way that they're pulling a percentage from your sales. But some people like that because then when they're doing better, they're paying more. When they're doing worse, they're paying less. So that'll be interesting to see when that comes out. Yeah. So they're in that weekly remittance.
Yeah.
Do they like it?
Yeah, I think they kind of do because they need something like that. The way that their cash flow is, it works better for them.
Mm-hmm. Yeah.
I've got a client that has got an on-deck loan, and they're taking out daily payments, but it's almost impossible to figure out. I've asked them to give me the documents because somehow they got this number that they added like $15,000 back to the loan balance, but I'm not sure what the rate is because I don't know how much is going to principal and how much is going to interest on on the daily payments.
Mhm.
I don't know if there's an AM schedule or what.
Yeah.
Do a statement.
So Meredith, once they get a loan, say through Fundera, is there access online to get those statements?
So that is
The lender.
is going through the lender. We still like to be the point of contact there because I feel like we can be a little bit more effective. But usually speaking, like when we are working through offers with customers, we almost always help them prepare an amortization schedule so they have an idea. And the other thing that's nice is like, so if that was, let's say that Dennis, your client, got a loan through Fundera, but it's with On Deck. The benefit of working with Fundera is if you're just looking at their daily payments, you would email us and say, and CC the client, obviously, so we have their permission, and say, what was the offer here? Like, what were the terms? And we can tell you that.
Okay.
You know? So we can say, like, oh, look, it looks like they told them 16% interest, but when calculated to APR, like here's actually what they're paying, so you can get an idea. Oh, and then by the way, they paid an origination fee on that one, or something like that, and there is a prepayment penalty. So make sure that you have insight into what is happening there. I think that's a nice thing about us being very accessible, and we will have access to that information.
Good.
Nice. Any other questions before we end our show today?
I think that's it.
That was very
It's
informative.
good. This is a good panel here today. It's good. A lot of questions.
Absolutely.
Pretty interesting.
Just put my email in if you guys have questions. Just send me an email. I'm happy to help.
Thank you. Thank you. So there's no reason for everybody here today not to go to fundera.com/advisors and sign up.
Yep,
I like that.
absolutely.
So we should all be advisors here.
That's it.
Meredith, thank you very much for coming on. Very, very informative. Went very quick today.
Yeah.
Come and join us anytime you'd like to. Just pop in. You'll always be invited to our Hangouts.
Oh, thank you. Thank you so much for having me.
Have a great time at Scaling New Heights.
Thank
Yeah.
you. You will be missed.
We'll see you at Sleater.
Yes.
Yeah.
Ready for Vegas after New Orleans. Oh, Lord.
Are you going to be at QB Connect?
Yes. So we may not have a booth, but I'll be there, so you can track me down. I'll be easy to find. I'm pretty loud, and I'll wear a Fundera shirt.
Good.
Alrighty, everybody. Have a wonderful weekend. Thank you again, Meredith. I will see everyone next week. Same time, same place.
Bye.
For me, I'll be
Bye, Meredith.
Bye-bye.